Hello, everyone. Welcome back to the Schaeffer Stock Market Podcast. This is Josh Selway. I am an editor at Schaeffer's Investment Research, and I got to tell you, folks, this week I am feeling quite ill. I feel absolutely terrible, but the show must go on. The show must go on, so I am here talking to you, and I'm going to give you a quicker than usual breakdown of what we've been covering over on the website. I'm trying to get in and out quick today because I might need to go take a nap. It's rough out here today. So for a general outlook, we got some upbeat trade commentary, nothing substantial though, but right now we're in that little period where it seems like the US and China are going to have some conversations on trade. President Trump said that the trade discussions right now are more serious than they have been, as we've been saying all year long, all throughout 2019. It's just no good to speculate on this stuff. Who knows where it's going to go? One tweet could send stocks in a certain direction. But what I would recommend for sure is to check out every week, as I always do, check out our Monday morning outlook, usually written by our senior VP of Research, Todd Salamone. He really breaks down a lot of different things to consider for the volatility in the market and how you can play these sharp pullbacks or these sudden rallies, and takes a really good look also at the sentiment picture on the street, which plays into stock movement, and is something we tend to focus on quite a bit here at Schaeffer's Investment Research. First, let's hit this latest update in Papa John's stock, ticker PZZA. Papa John's, obviously a tumultuous few years there with the ousting of their founder and CEO, John Schaeffer. But just this week, they named a new CEO, Rob Lynch, who was the president at Arby's Restaurant Group. So he's coming in to turn this pizza chain around, and he'll be working with Shaq. Obviously, Shaq's is now an ambassador or whatever you would call it for Papa John's. So that stock jumped up the charts somewhat this week. It was last seen trading around the $50 mark, and that area on the charts has been somewhat of a technical ceiling for Papa John's shares in recent months. So if it can continue to move higher from here, it could be signaling a breakout for the stock. And speaking of breakouts, Dollar General stock, ticker DG, has just been outrageous this year. The company just reported another strong earnings report. It gapped higher, and it continues to move higher today. A lot of bullish analyst attention, a lot of price target raises. The stock is at all-time highs. It was last seen trading around $157 per share. And what investors really liked is that the company pointed out that it's not really feeling any effects from all the tariffs that have been obviously weighing on a lot of other retailers. So investors continue to pile on Dollar General. That stock has exploded this year. It's just been a steady gainer. Came into 2019 around $110 or so, and as I said, up around $157 per share right now. So that company is just delivering on all cylinders. I know where I live, there's a lot of Dollar General. It's just in a small vicinity of the city. And there's always a few cars there. So things seem to be booming at Dollar General. Quick, easy place to go get things, I suppose. And that's why people prefer Dollar General. Doing fantastic. And this comes the same week as sector peer Dollar Tree reported earnings, and just not the same type of performance here for Dollar Tree. So Dollar General, the clear leader in this space right now. And as for a huge earnings loser, Ulta Beauty, ticker ULTA, down almost 28% today after, by all accounts, a dismal earnings report. Lots of bear notes from analysts. We see, for example, a downgrade to equal weight here from Morgan Stanley. Ulta had been doing pretty well in this first half of 2019. Had been consolidating in the mid 300s in recent months, but today all the way down at $242 per share. Yesterday it was up at $340 per share. So that is a massive collapse for Ulta Beauty after earnings. I haven't had a chance to go through and read that earnings release just yet, but I'm interested to see what exactly is causing such heavy selling on this stock. Another name that reported earnings, and it's not making a huge move, but I still wanted to bring it up, that is Jinko Solar, ticker JKS. And the stock's slightly higher today after reporting earnings. The company announced better than expected solar module sales, so that's helping the stock. But the day before earnings, we actually covered Jinko Solar over on schaeffersresearch.com, and we noted that there had been very high levels of call trading, and it seemed as though traders were betting on an upside move here from Jinko Solar, specifically targeting the September 20 call that has seen a very large increase in open interest in recent weeks. So those call traders should be happy depending on how much they paid for their call options. Of course, if you have any questions about options trading, head on over to our website and check out our free education section, which has a lot of info for people looking to trade options. All right, let's scoot through a few more names here. Disney stock made another notable move thanks to more buzz around its streaming service, Disney Plus. Projections show that U.S. households that plan to subscribe to Disney Plus are actually supposed to double what the company previously expected, which is pretty remarkable. That's according to a UBS survey. So Disney projected about 20 to 30% of households that have access to broadband internet would sign up to Disney Plus in the next 4 or 5 years or so. And this suggests that over 40% of consumers would subscribe to the service, which seems to make sense. Who doesn't love Disney movies? And the price seems to be fair there for Disney Plus. I said a while back that this could be a huge tailwind for the stock, and it certainly has been. Disney shares have been strong. Last seen hovering around $137 per share. All right, a few interesting notes here from the analyst community. We had Monster Beverage, ticker MNST. Credit Suisse moved in on Monster Beverage with a top pick designation, saying that the company's Reign Performance Energy drink would provide tailwinds for the company, and said that the stock's recent 6-week drop provides an attractive entry point and that the shares are cheap right now. So Monster Energy gained on that news. They were last seen trading around $59 per share, and they're trying to get back to their previous highs from a few weeks ago around the $66 level. Another top pick, or this one specifically, was named a best idea at Wedbush, and that was Zynga, ticker ZNGA. This is the company that makes mobile games, and the brokerage firm specifically mentioned the company's games such as Merge Dragons and Empires and Puzzles, and that these upcoming releases could drive growth through 2021. So Zynga stock named a best idea at Wedbush. Zynga has had a strong year on the charts, last seen trading around $5.74 per share, and they came into 2019 trading just below $4 per share. At those levels, that would mean that right now it's sporting a year-to-date gain of roughly 44%. And finally, I wanted to leave you with this. As always, we have excellent seasonal data over on the website provided by our excellent research team. Specifically, our quantitative analyst, Rocky White, provided some data on the best S&P stocks for September over the past 10 years. And one name that we pointed to was Southwest Airlines, ticker LUV, which tends to outperform during the month. Historically, Southwest Airlines has averaged a gain of 6.5% for the month and has ended the month higher 80% of the time over the past 10 years. But that wasn't even the best return among the bunch. Go check out that article. We have it over on that website, 25 stocks that shine in September. I highly recommend that. Seasonal data obviously isn't foolproof, but it is an interesting way to look at what stocks consistently do well at certain times of year, and that could also indicate when their businesses do well and other things like that. So it's at least one part of the equation if you're looking for a stock and when to buy a stock. But folks, I am going to leave it right there. I'm going to go take some medicine, probably take a nap, maybe even try to eat some food, but that could be a terrible idea. I'm really not sure. But thank you so much for everyone who's been listening every single week. If you haven't yet, please subscribe. Go ahead and review the show. Say whatever you want, whatever things you may want to hear certain weeks. Whatever you want. I am down for the feedback, and I will listen to whatever you guys have to offer. But again, I appreciate it so much. If you want to check out Schaeffer's, we're over on Twitter at Schaeffer's, on StockTwits as well, Facebook, Instagram, and check us out wherever you want, or go straight over to schaeffersresearch.com to see our intraday options trading blog, stock market news blog, all the things we're writing over there, and our free newsletters and some of our trading services as well. But again, thank you so much for listening. I will talk to you guys next week.